All right, what's up, guys? Magus. Today is November 22nd of 2020. We're going to do some Bitcoin and Ethereum analysis. So, jumping right into Bitcoin, you can see all my levels are clearly marked out. We've been going through a pretty crazy cycle. We compress and we expand, right? We keep getting these compressions. They lead to trend day breakouts. They'll lead to more compressions. So, it's going to be a question of, is it done or not? At this point, I'm deriving all of my levels that I'm going to be intraday trading with from the developing price action, and I'm not really going to be using any old levels. The simple argument is when you're getting up here, can you really argue that a supply level is really going to have supply when we're talking about 3+ years later? I would argue no. So I'm going to be using the levels as they develop. I derive them from the profile. I've talked about that before. Pretty straightforward. There are some good efficiencies for us to hunt lower if we do break down. The plan's pretty straightforward though. We have our value built between 18.3 and 18.8. So therefore, acceptance below 18.3 is going to be a short. Acceptance above 18.8 is going to be a long. Pretty straightforward stuff. That's how I will be deriving the directional bias. That's not actually how I'm going to be trading. Because if you trade like that, you're going to get one trade every couple of days. You're not going to get a lot of trades that way. Okay, moving on to the dips. Just make a point that we've been doing this a lot, where we do get these harsh sell-offs, and they're the perfect traps for people. Liquidity is getting pulled. We're hitting the bid pretty hard, and the fools get trapped down here, and we run it up on them. This morning's a perfect example. I'm sure if I look at the profile, I'm sure that you see on some of the more degenerate exchanges that people are really hammering aggressively on the short side, and as soon as the liquidity comes back and the bid shows up, they get run, they got squeezed pretty hard. So we've been doing that a lot. That's a pretty reliable setup right now. So yeah, again, break above 18.8, we're going to all-time highs. Break below 18.2 or 18.3-ish, and we're gonna go back down to at least probably the mid 16s, lower 16s, I would say. Um, Everyone wants to get bids filled lower. We'll see. Ultimately, I'm pretty happy with most of my exposure at this point, so I'm not really overly eager to get more fills. I don't really care either way. If I get fills down there, then that's cool. Moving over to ETH, definitely been my favorite asset to trade for quite some time now. ETH is definitely playing catch up at this point where the compression expansion over and over again on Bitcoin wasn't really happening with large caps like Ethereum, for instance, but it definitely we're getting to that point now where we're starting to break out up from the, this is quite a large compression right here. It's worth noting, and now we have new yearly highs now as of today. Yeah, levels are pretty straightforward. Move over to candlestick to make them pretty easy. We just swept the high. It is probable that we break back below. It's the same thing with ETH, right? The plan is that if we are able to break above this level convincingly, you have a long bias. Break below, and you have a short bias. Ultimately, I'm going to have a long bias probably either way. Even if we do break down, it's just going to be an opportunity to get more long exposure. Um, yeah, it seems pretty obvious that ETH is the play right now. Everyone's been talking about once we got above 400 that we were moving up, and now that we've cleared 500 and even retested, yeah, it's pretty obvious that ETH's going to run up. It has nothing but thin air above. Same thing with ETH as I was talking about with Bitcoin, where all the levels I'm going to use to trade are going to be derived off of the developing price action and not off of any of the older price action, right? I'm not going to close out a long or open a short in a supply zone from 2017 or early 2018. It just doesn't make sense to me. I'm going to keep using current price action to do my intraday trading. That pretty much does it. It's pretty obvious. Directional bias is up, and it's going to be up until we're proven wrong. Long till wrong. Don't try to be a hero and step in front of this. It's just not worth it. It's all that's going to happen is you're just going to lose a lot, and you're going to be extremely stressed out all the time because you're always going to be taking the wrong direction. You can get pretty sloppy at this point with longs. I mean, I wouldn't say as much here on Bitcoin, but really on ETH, you can get pretty sloppy with your long exposure. If you see harsh sell-offs, just buy them. This is not investment advice, but this is what I see we should be doing. Yeah, so that does it, guys. Long bias. I think that Bitcoin very well could be dying off here. The trend. It'll be really interesting to see how it interacts with this value. That's what I would say, right? If we are able to get a clean break over 18.8, it's going to be pretty obvious that we're going to run the highs, the all-time highs. But I do think I'm leaning a little bit more towards bearishness here at this point. Even though the trend hasn't really failed in the flow, I'm seeing changes in the flow. So I think that the pullback comes. And if we are lucky enough to get one of those harsh 20, 30, 40% sell-offs, um, definitely recommend people capitalize on that. I know I will. All right, guys, that's going to do it. Long till wrong.